Once the AI bubble has burst, yeah, I'm telling you, the U.S. economy is going to hit a break and go into a recession, I would argue. And even a little tiny hint that, the CapEx story is over, I'm telling you, Nasdaq will be down 20% like in no time. There's no doubt in my mind the U.S. got its ass kicked in Iran. To me, it's shocking. As an American, I'm ashamed. Trump decided to essentially concede defeat to the Chinese. This was actually the first proxy war between the United States and China. That if Iran got this far, it had a lot to do with China. I think oil will start heading higher in about a week's time.
I'm pleased to welcome back to the show David Woo, CEO and founder of David Woo Unbound. On the agenda today, the unwinding of the tech trade. Semiconductors fell dramatically this week, especially overseas in the Korea Kospi Index. Meanwhile, we'll talk about the latest jobs numbers that came out and how markets reacted to a softer than expected jobs number. Also, we'll be talking about the fragile Middle East ceasefire and what's currently going on and whether or not WTI can stay low. We're relatively low at around $70, or will it start shooting up anytime soon? David, welcome back to the show. Good to see you.
Thanks for having me back.
Right now, we have a situation where nothing that has really gone to all-time highs last year is extending its all-time highs. Stocks have not extended into new all-time highs. Gold is at a down year. Bitcoin has had a down year. So we'll talk about the rotation trade, which I think is the theme so far this year. Let's start with some recent economic data. Jobs numbers came out yesterday on Thursday, July 2nd. 57,000 jobs added to the non-farm payroll numbers. The expectation, the Wall Street consensus was 115,000. So that's much softer than expected. Yields actually started moving, I believe, yields started moving down on the news. Gold moved up a little bit. Stocks reacted to different news altogether. We can talk about that. But what's your reaction to the softer than expected jobs numbers? It is a very noisy data point, but it is one data point that's much weaker than expected.
Right. I think, first of all, I think the whisper number probably was lower than the consensus number published on Bloomberg. I think actually after the JOLT number that came out early in the week, given that hiring was weak in that report, there was a very good chance that we were going to get downward revision for the May number, which is what we saw. And I think from that point of view, it was interesting to me that actually the bond market, sure, rallied a bit, but not that much. Because actually, I think people are starting to understand that actually the economy is not doing that badly, actually, believe it or not. Now, it's interesting because nobody saw this coming 3 months ago. I mean, one of the reasons why gold has done so poorly this year is because real yields have been repriced higher almost every other week. Okay, the real yields have been the biggest, I would say, headache for gold, basically bulls. And even with oil price having fallen, and then for a while, real yields was chasing real yields, basically oil price, even with oil price collapsing, real yields actually are still near the highest level in 5 years. And this has been a big problem. Now, the question was why? I mean, there's no doubt since April, there's been massive data surprises to the upside in the US. Yeah. Now, the question is, and I don't think yesterday's non-farm payroll number changes that. Okay, the question really is, why is the U.S. economy doing so well, especially given the oil shock that we saw early in the quarter? I think the reason what it comes down to be honest with you, David, is that I think it's in fact a little bit more than AI. I think what's really going on is that last year, if you recall, in the Big Beautiful Bill, there were all these tax provisions for 100% expensing of R&D, of CapEx, of manufacturing structure and so on and so forth to encourage investment. Last year, this did not have much of an effect on the economy only because, there was a massive policy uncertainty shock, the trade war, the shutdown and everything else. I think what is really happening is that coming to this year, policy uncertainty had subsided. And then, this whole AI story and then the CapEx incentive all of a sudden looked very attractive. And that's what's really going on. I think what you're seeing is pent up demand, okay, of basically hiring. And when it comes to CapEx, that's really propelling the economy forward. So I would say that, the gold rally yesterday was a bit premature because I don't think that, it was a 2% rally, it was a big rally, markets thinking, wow, maybe this is it. Maybe the labor market is going to roll over and real yields are going to collapse and the gold is going to go up from here. I think it's much too early to actually make that case. In fact, I worry that real yields are going to keep going higher until the AI bubble bursts. And that's when gold is going to get a real, basically help. In my view, gold's biggest problem is AI. Until the AI bubble has burst, I think gold is going to continue to struggle. But my view is that there's a very good chance the AI bubble is going to burst in the second half of the year.
We have a scorecard for you of the calls you've made on my show. You've been on here twice now. 7 months ago, you said that the AI bubble is going to start bursting. You were short the Nasdaq. Actually, barring the big rally we had in April, you were pretty much right. It's starting to happen now. Now, the the question is, what happens to the other markets? You also called that Bitcoin is finished. That's what you said. That's clearly been correct so far. You said Kevin Warsh won't cut to please Donald Trump. So far, I think markets would agree with you. So that's before Warsh was even confirmed. And you correctly called gold to retrace $4,000. So pretty much every single one of your major calls, barring the AI trade so far, has been correct on my show. So congrats on that. Just want to point that out. So let's talk about the AI trade now. You said by the second half of the year. What has propped up the AI trade last year was CapEx spending. The assumption here is that the CapEx spending will unwind towards the second half of 2026, David?
Yes. So, David, I mean, as you said, the last time I came on the show, I said I was bearish AI. I mean, bearish AI for a while. Mm-hmm. Actually, if you think about this, in February, March, I think I was looking very good. The AI trade actually was, essentially was literally took a pretty big hit. And then it rallied back in a very big way, as you know, in April. The question is why? And was that for the right reason? Now, there is no doubt. I mean, what actually really happened, besides the ceasefire, was the fact that 2 days after the ceasefire over the Iran war was announced, Anthropic announced the release of Mythos. And let me tell you this, Mythos was what really re-energized the whole AI trade because people thought that, wow, Mythos, essentially was going to be this halfway house between like LLM and AGI. And then all of a sudden, if people had been worried like myself about the capabilities of frontier models having plateau, Mythos was like a total game changer. And this is why like the market just took off. And I think, for a while I felt uncomfortable, but I didn't have I didn't have anything against that, because I think Mythos was a game changer in many ways. However, the reason why, up 2 months ago, my anti-AI view has been strengthened is when it became very clear that Mythos is too good for its own good. As by now, because Mythos, the problem is that Mythos is so good that it's been held back, for national security reasons, because we now know that any hackers, upon accessing Mythos, will be 100,000 times more dangerous and more essentially destabilizing. This is why the Five Eyes, this is the joint intelligence sharing effort between the United States, Canada, UK, and then Australia and New Zealand, issue a major warning last week, which was like totally unprecedented. They're saying even before, they didn't even mention Mythos. They just said that within months, there's going to be a major cyber attack against governments. That's all we need to know. All I know is that cyber attacks, have gone through the roof even before Mythos. And if Mythos actually is widely disseminated, this is going to be a problem. So from that point of view, again, remember, the market, the whole AI trade was re-energized by Mythos because people say, wow, that's great. Now the sky's the limit. My problem is that Mythos has actually dramatically increased regulatory risk for frontier models. And therefore, if only 150 users have access to basically Mythos, guess what? How is Anthropic going to ever monetize its research and development? Especially given the Chinese are massively basically cannibalizing basically the lower end models. So from that point of view already, like you think about this, Mythos is out for almost 3 months. And then still remains restricted access only. And usually after 3 months, like any lead any LLM has completely vanished. All of a sudden, you've got last week, the big news is that there are at least 2 Chinese startups and 1 Japanese startup that have developed AI models with the same capabilities of Mythos. So you tell me, how can I get bullish about AI when basically OpenAI is seriously in trouble, and in my view, Anthropic is not too far behind. So I think from that point of view, again, this is the reason why I don't care about Micron, all these things. At the end of the day, 80% of all AI revenue goes to these two companies, Anthropic and OpenAI. They're the ones who then pay the hyperscalers for computing power. And then the hyperscalers turn around to buy chips from NVIDIA. And then NVIDIA then goes out and basically buy chips from TSMC, and TSMC buy Applied Material, ASML. But at the end of the day, the money, the whole entire CapEx spending is being paid for by OpenAI and Anthropic in terms of the future revenue. And right now, I struggle to see where that future revenue is going to come from. And that makes me very bearish AI.
Gold is still trading much higher than last year in this multi-year bull cycle. And First Mining Gold, today's sponsor, is a Canadian developer built to capitalize on this historic bull run. First Mining Gold is advancing two of Canada's largest gold projects, Springpole in Ontario at 5.6 million ounces with very robust economics, and Dupaquet in Quebec's prolific Abitibi region at 6 million ounces. Springpole is in the final stages of an 8-year federal review, with a decision expected any day now. Momentum is building. Several Indigenous communities back it, and when two signed last week alone, the stock jumped nearly 35% in a single day. A provincial EA decision should follow this summer, clearing the way for Springpole to become one of the next mines built in Canada. First Mining Gold trades at a discount to peers, with these catalysts not yet priced in, according to analyst reviews, and each and every $100 move in gold adds $230 million to net asset value. You can learn more about First Mining Gold in the link down below, or scan the QR code here. Perhaps the Defense Department. OpenAI, for example, has made a deal with the Pentagon to go into its military network. Maybe that's the next, maybe they're going to turn to Lockheed Martin. Who knows?
Right. I mean, listen, you're right. By the way, if they really go down that path, that makes it even more clear that these models are never going to see the light of day from the point of view, essentially, you and I, or big Fortune 500 companies being able to access Mythos. It's going to be, it's only going to be a Pentagon thing just because they're going to fight the Chinese and so on and so forth. I'm saying that this is the problem. And by the way, you know what? The biggest problem with Mythos is the fact that Mythos, and the Mythos class models have already attained what they're called recursive learning capability. In other words, the Mythos version 1.0 can actually write the codes for Mythos version 2.0 without any human interference. In other words, if you and I have access to Mythos, we can immediately come up with a better version of Mythos, in which will, of course, completely commoditize the entire AI. So you understand where we're going. So from that point of view, there is good, but there is such a thing as being too good, for the commercial viability of the entire technology. And I think that is exactly the point we're at right now.
Here we have another piece of news that I'd like to share with you. So Meta is now pushing into the cloud computing space. Immediately after this news, I'm not sure if it's related, it probably is, the South Korea Kospi index fell 8% 2 nights ago. The chip sell-off spilled into Japan. The country's most valuable company tumbled more than 13%. The Nikkei went down 2.5%. Korea is dominated by chip-making companies, right? Hynix, Samsung, and what Meta's pushing to cloud computing is signaling to Wall Street is that perhaps chips won't be as much in demand if the Mag 7 start moving into non-chip related spaces, let's put it that way, or less chip-intensive spaces. What's your reaction to the story?
I don't think that's true. I think the market is reading it correctly, and the market is saying, what this basically means is, because you have to remember, Zuckerberg has been throwing billions of dollars into CapEx, even though they haven't got a cloud business until now. And the reason is because Zuckerberg said, we're basically developing our own AI models. Llama, as you remember, they pour a lot of money into Llama. It started out as an open source model, and then became a closed source model, and then now it's back to open source. But one thing is very clear. Llama models are no good. Right now, by the way, if you look at all the AI LLM scoreboards, Llama is not even in the top 10. Very much like Grok, by the way. SpaceX is the same problem. Elon Musk's model is shit. But the point here is this. There is no doubt right now, AI has become Anthropic, and then and ChatGPT, and two or three Chinese models and a bunch of other ones. Well, everybody else is basically like
Yeah,
underneath it.
there's a trade for
I
that
think
actually on prediction markets.
exactly.
Just sidetracking here. Claude Anthropic is voted by traders as the number one. ChatGPT 16% chance it'll be the best model by 2026. There's various criteria how to rate this. Gemini, Grok, yeah, like you said, Llama's not even on this list.
Yeah. And then the point here is this. So when Meta says that we're going to start actually, essentially renting out our excess, basic computing power, he's basically saying that, you know what? We bought too many chips. We overbuilt our AI infrastructure, and now we cannot pay for it because our models are no good. And I think from that point of view, this is the first time that a major player in the space has come out and admit that, you know what, the return on investment that they were hoping for is not coming to fruition. And therefore, they have to find a way. They cannot go out there and sell this equipment. So the best thing they can do is basically rent it out. And so from that point of view, what I'm saying to you is that the Meta news is read as a bearish piece of news for all the chip sector, as basically a sign that the day of reckoning for some of these hyperscalers is finally, coming home to roost. And I think, and especially Meta is interesting because Zuckerberg literally has been saying, I don't have to remind 2 years ago, he was saying, oh, wow, I don't care if I'm ever going to make a return on this investment. I cannot basically stay out when everybody else is throwing money into this and so on and so forth. And I think the fact that this is an acknowledgement that all these billions of dollars that he sank in to basically build their own models have basically pretty much come to nothing. And now he's just trying to, salvage, the investment by renting out the excess capacity they've got now. That's bearish.
If you take a look at the tech sector, Apple, for example, I'm just throwing Mag 7 names out there. It's up for 14% on the year. It's not bad, but it's not fantastic anyway. Amazon is pretty much flat, right? Let's keep going. Tesla, pretty much, yeah. Tesla is down actually on the year. The list continues. Microsoft, right? Microsoft down on the year. What have you got left? Netflix, right? Netflix down. Was it down? Yeah. Let me just double check on this. Down, yeah. My point is, the tech sector is driven by stocks right now. That's it.
Exactly.
Now, even that's not doing very well. AMD, Intel went up a lot, right, because of the government contract. But when you say the AI bubble was popping, I mean, it's already slowed down for the entire Mag 7. Yeah, Intel is a big winner here. But but when you see news like, okay, Meta's pushing into AI, cloud computing rather, and then semiconductor stocks start selling off, is that an indicator of fragility for the semis?
Sure. I think let's go through this. Okay.
Yeah.
Last year, if you recall, the big winner was NVIDIA. NVIDIA specializes in, training chips. And they're like the best training chip. And training chips are actually very difficult to design, actually. So from that point of view, they don't really have that much competition. However, these days, demand for training chips is actually going down. Because now, models have finished training. Guess what? Now it's about applications. And then for application, you need inference chips and not learning chips. And now guess what? Inference chips, that's why the inference chip makers did very, very well at the start of the year, which is Intel, AMD, Broadcom, all these guys basically make inference chips. But it is also true that anybody can make inference chips because inference chips, unlike learning chips, are relatively less complicated. And this is why even OpenAI has now basically designed their own inference chips. Now, this is why all these inference chip maker, Broadcom and AMD have been drifting lower, as you know, because people understand that now, that there is not that much differentiation in that sector, and therefore profit margin is going down already. Now, but in the last 3 months, however, everybody's been piling into high bandwidth memory chips, as you know. That is Samsung, Micron, and Hynix. Mm-hmm. Now, what's interesting is that these high bandwidth memory chips are not that sophisticated either. It just so happened that there's a massive shortage because these three companies were literally on their knees 2 years ago, basically after COVID. Basically, because if you remember, after COVID, the demand for PCs, everything just collapsed. Yeah. And therefore, for 2 years, these companies did not invest in capacity. So that when all of a sudden people say, oh, well, you need inference chips, you need AI to remember what you did yesterday, the day before yesterday, the day before that, all of a sudden demand for high memory chips going up at a time there's no basically capacity. And that's why the prices of these things have gone up so much. But again, that's not sustainable because already new capacity is coming online. By the end of this year, there will be a lot of capacity coming online. But again, this is not it's not an NVIDIA training chip story. A lot, three of these guys, they can all make these chips. And guess what? The Chinese are pretty good at it too, by the way.
Yeah.
And then so from that point of view, this is why, like, I think, this is why the memory rally, which has been supporting Nasdaq, to me, that's going to fizzle out. And then we'll see.
So on your call that we should be shorting the Nasdaq. So can you explain why? So first of all, you are mostly correct because I have on my screen here of the Mag 7 stocks, 3 of them are in the red. Can you explain why half the Mag 7 stocks are down this year while the Nasdaq is still up?
Yeah, because again, this has been a story. The hyperscalers, right? So because everybody understands, because the Mag 7, right? I mean, most of them are hyperscalers, right? I mean, that is, Microsoft is hyperscaler, Amazon, Google, and Meta. Let's call that a basically hyperscaler. And these 4 have gone nowhere, have gone down because people understand that, you know what? These guys are the ones who are spending the money and not the ones who are getting the money. They're the one who are spending the money, and people are starting to understand their free cash flow is going down. Who knows if they're ever going to make money, and then prices are going through the roof for everything that they're trying to buy, so the return on investment is not that great. This is the reason why the Magnificent Seven is down, and then Tesla was fascinating. Finally, I kind of feel like the market's starting to understand that company has a big problem. By the way, it's like, yesterday, Tesla came out with better than expected revenue numbers. They sold more cars than expected and all that. The stock basically took a hit because everybody knows that Tesla's valuation is not about trading cars. Who cares if they sell another 5%, 10% more cars? People want to know. So, I mean, what about the humanoid robots? What about these driverless cars? And guess what? They're going nowhere. They are absolutely nowhere. Okay, even the Chinese are now making better humanoid robots than Tesla. And then, when it comes to like robo taxis, look at what's going on actually in the trial cities where Tesla's been participating. Every other week, I'm hearing, literally very scary stories involving their cars. Okay, so from that point of view, it was very, very interesting that Tesla stock actually sold off on supposedly good news. People could understand because investors presumably were hoping for more guidance on the goddamn basically the stuff that was supposed to make money for Tesla. But anyway, but be that as it may, I think, the Magnificent Seven, I mean, so from that point of view, I was right about the Magnificent Seven. As I said, I would be the first one to admit, I did not see the massive rally in Micron, Samsung, and Hynix. And that has been the biggest story, I think, of 2026. I mean, Micron stock's kind of like
going to unwind later. Yeah, that's going to unwind later this year. Is that your thesis?
I think absolutely.
Okay, and so once this unwind happens, what does this have to do with gold? You said once the AI story pops, gold rallies. Why?
Because right now, as I said before, like gold's biggest problem is rising real yields, right? Because real yields is what you get when you buy an inflation index bond, okay? And inflation index bonds, by definition, are inflation hedge, basically like gold is. So therefore, when real yields go up, okay, that's a big problem for gold, especially given, I don't have to tell you, gold doesn't pay any interest. So from that point of view, I think the biggest problem for gold this year has been the repricing of real yields higher. And real yields have been going higher in the US, primarily because the US economy has been doing better than expected. And I think largely because of the AI bubble. Because the AI trade has driven up stock prices so that, the positive wealth effect, consumers have gone out and spent money that they haven't got simply because their 401k is basically going through the roof. And at the same time, companies are basically been spending more on CapEx. So I think that, but once the AI bubble has burst, I'm telling you, the US economy is going to hit a break and go into a recession, I would argue. So, and this is where it gets very interesting, right? Because if you remember, going into the final phase of the dot-com bubble in 1999 into 2000, right? Real yields were going up, the dollar was going up, and dot-com, Nasdaq, US was going through the roof and that kind of thing, and gold did poorly. It was not until the dot-com bubble burst, the dollar started to go down, and then the Fed started to cut interest rates. That's when gold got this huge boost. That lasted a whole decade. So I would say that I think the AI bubble has been boosting the dollar, basically boosting the US economy at the expense of gold. But once the AI thing has burst, and let's just hope that it does, because you probably won't have me back on the show if it doesn't, in the second half of the year. I would say that I think gold will finally get a bit of a break.
Well, let's define bursting. What does that mean? Let's set the parameters here.
I think, listen, I mean, at the end of the day, there are a lot of ways. Listen, I am not, I think at this point, most of my clients are big macro hedge funds, sovereign wealth funds. They're not looking for home runs. I mean, if I make a home run call, that's great. But I don't have to say, it's going to go down 50%, it's going down whatever it is, because also once bubble bursts, actually, by the way, the decline, as we learned about the dot-com bubble, it's not like a straight line. It's going to go down, it's going to go back up and go down and so on and so forth. What I'm saying to you that right now, let's just say that I'll be very happy if Nasdaq goes down 20%. Let's just say that.
Yeah.
Okay. That will be enough, let's put it this way, for the Fed to actually start cutting rates, in my view.
Or it could just be an announcement from any of these large semiconductor companies that maybe they'll scale back production, or maybe that these Mag 7 customers, B2B, are going to demand less chips for whatever reason, right? That could be the beginning of the burst of the bubble.
Sure. In fact, actually, the first window that's going to happen, I think gold bulls should pay a lot of attention to the final week of this month. Because in the last week of this month, you're going to have the Q2 earnings, from Microsoft, Amazon, Google, and Facebook. And I think from that point of view, my view is that this is the first, I would say, quarterly announcement that we could potentially get some not so great guidance from these guys about their CapEx spending outlook. And I think even a little tiny hint that, the CapEx story is over, I'm telling you, Nasdaq would be down 20% like in no time. Right. And I think so from that point of view, the only question is are we going to get this? Because these companies, Nasdaq tech stocks, you only trade tech stocks every 3 months. It's like, what? The only time you're going to get a new piece of news is, the next earnings call. And I think this earnings earnings season is far more important only because we are starting to see, all sorts of essentially all sorts of problems, that's already starting to seeping through, like OpenAI saying that we're going to consider, delaying their IPO, that Meta is basically admitting that they overinvested in chips and so on and so forth. These are telltale signs. Now we're going to see if we're going to get that confirmation from the rest of them, in 3 weeks' time. And if we do that, then I'm telling you, I can't even imagine what's going to happen to Micron stock. I mean, there will be there will be tears in the streets in South Korea. I can tell you that much, because literally half the country is borrowing money to buy Hynix and basically Samsung. I mean, if that thing really, if this thing basically bursts, I mean, it will be tragic. Let's put it that way.
It would be tragic. And also right now, I'm going to show on my screen very quickly that, very shortly, that the market is not pricing in this scenario that we're discussing right now. So it may be still an early trade. Take a look at the CMA Fed Watch tool. No chance of any Fed cuts by 2026, end of 2026. Furthermore, if you look at prediction markets, 9% chance of a recession this year. So if a Fed cut is predicated on a recession, predicated on an AI burst, traders aren't predicting that right now. What the banks are telling us is that the Strait of Hormuz may normalize, right? The closure of the Strait of Hormuz may be a normal thing now, and oil may slump back towards $60. Fundamentals are rapidly reasserting themselves, Citigroup analysts say. Shipping flows are normalizing, Chinese buyers remain absent, physical crude markets have weakened sharply, and inventories have drawn far less than expected. Okay, let's talk about Strait of Hormuz.
Yeah, I happen to be long oil, and so from that point of view, like I can't say that I've been right over the last basically month because oil is just literal. I mean, I got into oil basically in January at 60 bucks. It went all the way up to 120. I probably should have lightened up. I
Yes.
didn't. Now it's back to basically 70. But I feel good about this. I still made money because we're talking about the futures. So rolling in this. But the point here is this. I'm of the view. I think oil will start heading higher in about a week's time, and I'll explain to you what I mean by that. Because in a week's time, we will be after both July 4th as well as the funeral.
I
Okay,
really hope not. I drive a
essentially
gas
in
car.
Iran. Okay, fine. Okay, fine. But I think the
But
point
anyway,
here is that I see what you're saying. But the point here is this. To me, the deal that Israel and Lebanon signed last week in Washington was a game changer. It's very bullish for oil. And I'll explain to you what that means. Okay. A lot of your audience may not know this, but the demographic makeup of Lebanon is one third Sunni Arabs, one third Shia Arabs, and one third Christians. Now, let me tell you this, the Christians and the Sunni Arabs, they hate the Shia Arabs, and the Shia Arabs are basically Hezbollah, okay? Now, let me tell you this deal that was signed by the Lebanese government and the Israeli government last week was the first time the Lebanese government essentially accepted and essentially acknowledged Israel's right to exist as a sovereign state, which you might think is kind of funny, but it is absolutely true. It's the first time ever Lebanon has even essentially go so far as to accept that Israel has the right to exist. The second thing that the Lebanese government agreed to is that Israel can stay in southern Lebanon. You might say, what the hell? What were these basic Lebanese thinking to sign such a deal with Israel? Well, let me tell you what the reason is. Because the Lebanese government, they were horrified by the MOU signed between the US and Iran that gave Iran a seat at the table over the Lebanese situation. And I'm telling you, the Lebanese, I'm talking about the Christian Lebanese and the Sunni Lebanese, they don't want Iran to basically get even more involved in Lebanese domestic affairs. So they decided that they were going to join forces with Israel in order to keep Iran out. And this is extremely important because this means that Israel's going nowhere. And then from that point of view, this is another issue that the US is going to have with Iran in terms of, reaching any kind of final agreement. But this is only a small part of it. The bigger story here, David, let me tell you this, about this deal, was the fact that it was brokered by no other than Marco Rubio. Why is this important? Because as you probably know, Rubio hates the MOU. Rubio represents the Iran hawk in Washington, in the White House, together with Pete Hegseth and basically, John Ratcliffe, who's the director of CIA. And the fact that suddenly that basically Rubio decided to broker a deal that was going to make Iran very unhappy, that will make the vice president, J.D. Vance, who is basically a pacifist, very unhappy, tells me that Rubio can feel the political wind shifting in Washington. He understands now that basically that this MOU might just do in Vance. Vance, in my view, is politically finished, by the way. And so from that point of view, all of a sudden you've got this fracture between the hawks and the doves starting to come out in the open. And that will put Trump in a very tough spot in terms of making more concessions to Iran. And therefore, I think that after July 4th, after the Iranian, funeral for the supreme leader is out of the way, I think you're going to see there's a very good chance because you're like basically looking at Polymarket. Polymarket right now is giving only a less than 20% chance that Iran is going to walk away from the MOU negotiation. I would give before the end of July. I would say the odds are at least double that, if not triple.
Okay. Another important fact I want to point out, you brought this up on your own channel, David Woo Unbound, which I encourage everyone to check out and subscribe. By the way, I'll put the link down below. Take a listen to what you said recently about this issue.
But the Iran war has exposed the limits of this model. During the fighting, the United States launched more than 1,000 Tomahawk cruise missiles, roughly 10 times the number it currently procures every year. Yet even the Pentagon now admits that Iran still retains around 70% of its missiles and mobile launchers.
Yeah, wait a minute. What? That's not the number that was given to us at the start of the war. They said 90% of them were knocked out, and then now they're admitting it's only that they still have 70% left. Okay, if this is true, has huge geopolitical ramifications. First of all, where did you get this number from? And second, if it's true, what's Russia thinking? What's China thinking?
By the way, the number I'm citing has been reported by every mainstream media, essentially the outlets,
Yeah.
from the New York Times to Washington Post. I'm not making up these numbers.
Yeah.
Now, true, this is not an official announcement from the Pentagon. This is a leak from the Pentagon into the mainstream media. Because these things, you can't really like hide them. There's no doubt in my mind the U.S. got its ass kicked in Iran. And that's the reality. By the way, I would even go further than that. It was actually very interesting because during the war, Iran had released hundreds of satellite images of the destruction it had basically brought on U.S. bases across the Middle East. And then the Pentagon said, oh, these are all fake and doctored images. They're not to be believed. And then all the mainstream media never carried those images, especially given the fact that U.S. commercial satellite imagery companies were prevented from essentially releasing any corroborating evidence. So nobody wanted to basically go up against the Pentagon until the New York Times, and followed by the Washington Post, they went to European commercial satellite image companies to get a hold of basically corroborating essentially images released by Iran. And then the conclusion they both came to is that not a single one of the satellite image that had been released by Iran was fake. And that the numbers, the extent of the damage that Iran brought on U.S. bases across the entire region is unbelievable. To me, it's shocking. As an American, I'm ashamed. I'm ashamed because the U.S. spends $1 trillion a year on defense. Where does that money go? Taxpayers have the right to know that the country, the United States, that spends more money on defense than the next 10 countries combined, cannot basically blow away Iran that represents 1% of U.S. GDP, and that the U.S. president is getting on his knees and basically begging for basically a way out of this war. To me, that is something that, that American taxpayers should be asking themselves this question. Because I think it just reveals not just the incompetency, but the corruption of the entire system. I mean, where is that $1 trillion all going to? And Trump now is asking for $1.5 trillion in defense spending. Now the military industrial complex in the U.S. is going around saying that, the reason why we did not kick Iran's ass is because we're not spending enough money on defense. Who are you trying to kid? And this is why I think this is just, it's unbelievable. But to me, this is very bearish for the U.S. hegemony long term. I think the Chinese probably are looking at this laughing. I think the U.S. military capabilities become a butt joke in Europe, in China, in Russia. Everybody's saying, like, what, you spend $1 trillion? It doesn't show. And I think from that point of view, this is a huge problem. Trump cannot admit it, by the way. That's why every day he's saying, well, we won, it's a victory, it's a total victory, we destroyed them, and so on and so forth. If you destroyed them, why are you now basically getting on your knees begging for a way out?
Well, this is from the BBC. Iran nuclear military damage revealed after restricted satellite images are released. This is 7 hours ago as we're speaking. So the extent of damage to some of Iran's military and nuclear sites have been revealed for the first time after more than 250,000 previously restricted high-resolution satellite images were released. A leading satellite imagery provider, Planet Labs, restored access to images from nearly 800 locations in Iran, which they had chosen to restrict following a request from the U.S. government. Anyway, I won't go through the whole list. I suggest people go online and check this out for themselves. Several military sites, infrastructure have been destroyed. We have basically confirmation that civilian infrastructure in Iran is mostly intact still. So perhaps the Americans were pulling their punches and restricting their attacks to only certain places. Of course, we don't have boots on the ground. And to your point about the U.S. getting their ass kicked, well, they didn't deploy the full brunt of the military capability. That's the counter argument here. What do you
Yeah, the
think?
U.S. didn't drop the nuclear bomb on them. That's true. I mean, they could have basically. I always thought the U.S. push comes to shove should have and would have basically dropped the B-61, which are the nuclear bunker buster bombs, which would have basically blown up everything. But the problem here is this. I mean, this is no doubt. I mean, is that what is interesting, because this is not just about Iran. This is about the whole. And this is a tectonic technological shift in the science of warfare. Okay. The single biggest, I'll tell you this. It's like, what, these days, it's like, well, Zelensky wakes up in the morning and decides, well, let's go hit Moscow. And 12 hours later, Ukrainian drones are raining down basically
Hmm.
missiles on Moscow. It's become very difficult to defend against drones.
Yeah.
Okay. It is also very difficult to defend against drones when drones have access to, essentially sophisticated satellite intelligence. Iran, the reason why they were able to literally stand up to the Americans, okay, in this war is because just before the war, they had migrated to the military capabilities of the Chinese Baidu satellite, navigation system, which basically just give you some sense that the system is so good that their missiles and drones is actually speaking to the Chinese satellite in real time. And they can change course, essentially based on whatever the satellite is basically seeing on the ground. And this is the reason why Iranian, essentially, drones and missile attacks this time around were very precise. And this was a very big surprise to the Americans and to some extent the Israelis as well. But there is no doubt that this is what I said from the get-go, that this was actually the first proxy war between the United States and China. That if Iran got this far, it had a lot to do with China.
Hmm.
And this is why I find it unbelievable that Trump decided to essentially concede defeat to the Chinese. The Chinese are laughing their face off right now. But this is why I find it very difficult. I mean, maybe it's the corruption. Maybe Trump's
What do you
got
mean
too much money
conceding?
invested in the stock
What do you
market,
mean?
and he can.
What do you mean conceding defeat? In what way is he doing that?
Listen again. Trump is talking about. He's talking. He has just waived all sanctions on Iran without Iran having done anything. There are no more sanctions on Iran. All the sanctions that he had reimposed were sanctions before that. No more sanctions. The U.S. has waived all sanctions. Okay. On top of that, the U.S. Apparently Vance, and this is what the issue was actually this week, is that Vance had agreed to release $6 billion of Iranian frozen assets just to get the Iranians to sign the MOU. Okay. That, what I'm saying, and then the U.S. is basically, oh, well, no problem. We're going to, if you agree, you don't no longer have to, Trump is now saying, oh, Iran has agreed that they will not pursue nuclear weapons. Guess what? That's what the Iranians have been saying for the last 30 years. And nothing's changed. Iran always said that they're not pursuing the development of nuclear weapons. This is what they said to Obama when they signed that deal that Trump criticized and attacked so much. So now Trump says, oh, well, you know what? If they decide not to pursue nuclear weapons, I'm going to write a check with $300 billion. I'm sure I'm going to get some other countries that basically pay for it. It's the same thing at the end of the day. So just if that is not defeat, I don't know what is defeat. Okay. So in other words, the U.S. has not managed to get anything out of Iran. And now it's about to basically so I mean, again, this is
Yeah.
why I'm telling you, Trump can spin this however he wants. Again, people who understand what's going on, and I would argue that represents the majority of Americans, because I've never seen such vicious attack against Trump on X from his own base, the MAGA base. This is why I told you before, Vance is politically finished, because I cannot imagine after what I've been seeing in the last 3 weeks in terms of attack on Vance, that this guy has any shot in 2028. But what I'm saying to you, Americans are not stupid. The American people are not. Trump may be stupid, but the American people are not stupid. They can see that this deal is a total disaster, that this is the biggest foreign policy blunder in the last 100 years. And Donald Trump, who keeps telling us every day this was a total victory and that kind of thing, unfortunately, except for himself and maybe his family, nobody else believes it. At least if I don't know anybody else who believes it, not even his base.
That means that the war is going to stay prolonged, and we're going to have no resolution, and the markets will react in which way? Higher inflation expectations, tighter Fed.
I think oil prices have to go back up because Iran is going to say, right now, the issue is this. As I said, right now, the only reason why Iran even bothered to send a delegation to Qatar last week is because they are demanding the immediate release of the $6 billion of frozen money that Vance basically promised them. Okay. And then if they don't, what the message from Iran is that if you don't basically release this money right away, sayonara, bye, we're not coming back to negotiation. The Iranians do believe that they are in a stronger position right now. They believe that we can take pain more than Trump can, that Trump is a coward, that he cannot tolerate any pain. Stock market goes down 5%. He's already freaking out. Maybe he's got too much of his own money and his family's money invested in the stock market that he's whatever it is. So Iran, in my humble opinion, I think now it makes it very difficult. I think given that there is this fracture within his own White House about this deal, it tells me that it will be difficult for Trump to sign off on that $6 billion with no strings attached. And then if that's the case, I think the Iranians are not going to come back. And then that's when we go back to square one. So I think we're far from seeing the end of this, not because Trump doesn't want to tackle, not only because that he doesn't want to protect his own money, his family's money, and whatever it is, but I think it comes down to the fact that, again, the American people, especially his base, his own MAGA base, is seeing through, I think, this entire deal. And I think politically it will be very difficult for him. He's got another 3.5 years. I mean, he's got 2.5 years to go to actually live out. I think it will be very difficult for him to actually tackle more than he has. And Iran is going to make him pay. So from that point of view, I'm hoping that Iran is not going to make it easy for Donald Trump to tackle. That's what it is.
Yeah. The U.S., let's talk about Bitcoin. If gold goes up, does Bitcoin go up? You talked about Trump a lot. The administration promised a Bitcoin strategic reserve. What's the latest update with that?
I think the Bitcoin story, okay, ultimately, it's actually interesting, right? Like Bitcoin rally, like big time last year because what? Because of Trump, right? Because Trump got so much donations from the Bitcoin crypto community, for his campaign, that he was like sounding, he was every day talking about how bullish he was about crypto. That was the reason why, crypto and Bitcoin specifically just took off. Even before he was sworn in, as soon as he got elected, he started to talk about like how much he loved crypto and so on and so forth. Of course, in the end, I don't have to tell you his own meme coins having collapsed, and then we now find out he's made $1.5 billion. Essentially, it was an income transfer from people who bought these meme coins to basically to the Trump and Trump family. But the point in which I think interesting is that in the end, and I said this, I think one of your shows, is that Trump is not interested in crypto. Trump, if there's anything Trump is interested in, is stable coins. Because Trump Trump understands one thing very well, which is that, the dollar needs to remain strong if the US is to continue its hegemony. So from that point of view, Trump will never, essentially promote any alternative to the US dollar. I mean, whatever it could be, whether it's BRIC currencies, the RMB, or for that matter, even Bitcoin for that matter. But stablecoin is a different story because stablecoin, as you know, is pegged to the US dollar. And on top of that, the only crypto legislation that was adopted into law last year, partly because of Trump's support, essentially says that all stablecoins have to buy a lot of US treasuries to back their Bitcoin, whatever, the stablecoin issuance. In other words, so for stablecoin, it's a no-brainer for Trump. It's a peg against the dollar. So from that point of view, he sees stablecoin as being essentially the dollar's projection into the digital space. And at the same time, he sees stablecoins as being a potential big buyers of U.S. government bonds. So why not? But that's a very different thing than to say, oh, Trump is bullish for basically Bitcoin. He's not. There's no doubt. Like nobody is within this administration, including Besson, I would argue. So from that point of view, I think that's what the market is waking up to. Now, of course, the Bitcoin, the crypto universe still is giving money to Congress in the hope that they will find a way to get some kind of legislation done. I find it difficult to believe that this is going to be a priority for the Republicans right now. I think, there's a very little chance the Republicans are going to retain their majority in both houses. And I don't even care how many socialists are elected in New York. It's just not going to happen. I think, midterm elections, it's all about turnout. Right now, the enthusiasm factor about Trump is so low right now. I just think that more Democrats are going to turn out than the Republicans. This is why so from that point of view, there is no chance that any kind of meaningful crypto or Bitcoin legislation is going to be passed. I would say in the next 2.5 years. And you can say, well, is that bullish or bearish or whatever it is? I definitely don't. I see very little upside for Bitcoin. The only thing that could happen is that, again, if the AI bubble bursts, the Fed starts cutting interest rates, maybe crypto becomes more interesting then. But even then, it's not clear to me because if AI basically bursts, a lot of retail investors are going to sitting on a lot of losses, and they're going to be basically liquidating everything, probably Bitcoin as well. So because at the end of the day, Bitcoins are sitting mainly with retail investors. So I would say that, I'm not that excited about Bitcoin. I would say that, like if you're looking for an oversold asset, I think gold is a bit more interesting. But again, gold is one of these things that gold will only rally if the AI bubble has burst.
But just from a technical perspective, Bitcoin already retraced 50% from its top. That's not a compelling buy for you in itself, just based on historical price movements?
I think, obviously, I think it looks like, it's got some support here. Like, it hasn't been able to break lower. I don't know if it's because there may be some people who are intervening in the Bitcoin. There are a lot of people who've got a lot to lose if
Yeah.
Bitcoin were to a little go down because, it falls below 60 in a big way. Like, literally this thing, who knows where it can go. So it wouldn't surprise me. There are people who are engaging in, intervention. Especially, this is not the most liquid market in the world. Like there are people who, they're probably a concerted attempt in the Bitcoin industry, the crypto industry, to trying to basically draw a line in. So I can see that. I think for the time being, at least, I don't see Bitcoin going down. I don't think
Yeah.
it doesn't look like there's a lot of basically week long that's looking to get out and that kind of thing. So maybe it
Got
won't
it.
go anywhere. Yes.
Okay. All right. Well, finally, then we talked about a lot of asset classes. You don't like the AI trade going into the end of the year. What do you like? What are your top most bullish trades for the end of 2026?
Yeah. So I can't look that far, but I am long gold. I am long basically oil. So I am
Yes.
long oil because I think that, I'm bearish. I'm short Nasdaq 100. I am basically long steepeners. I'm long the 530 steepener insofar that I'm long 5-year treasuries and I'm short 30-year treasuries. But in a way, that's just a different way of expressing the sort of long oil and short Nasdaq trade. Because if that happens, the Fed is going to be cutting rates and then the curve is going to steepen. But nevertheless, I think the important thing for your audience is to understand that, people ask me, like very smart investor ask me, so are there any asymmetric trades right now out there? I said, well, are you kidding me? There's none. Okay. Right now, there's oil and there is basically Nasdaq. These two things are going to control all other markets. If you tell me where basically, Nasdaq is going to be, where oil is going to be, I'll tell you exactly what's going to happen to all other markets. These are the two. And this is also the reason why Kevin Warsh was so basically like, cagey about the outlook for the economy, because he's probably thinking to himself, like, well, where's oil going to be in 6 months' time? Where's Nasdaq going to be next time? He probably doesn't want to be, essentially gambling on that. This is why they're now in a data dependency mode. And that's what it is.
Okay. Excellent. Well, David, that was a very exciting conversation. Lots to unravel there after that talk. Where can we follow you for more information?
Yeah, first of all, listen, my book is out. Merry-Go-Round Broke Down. It came out a couple of months ago, immediately hit the USA Today bestselling list. So I'm now actually a best-selling, basically, author, novelist, and I'm also, by the way, just so people know, like I've been literally, I've been approached by 3 different Hollywood producers for the film rights of the book. I really want, especially if you're bullish gold, you need to basically read this book because in a way, it explains how gold got here. and then where gold is going, actually. But in a novel, actually, a novel about the world, a novel that hopefully you would find very interesting because it's gotten amazing reviews, by the way, like incredible reviews, like, from all the major reviewers. So, if you're interested in that, check that out. If you're interested in my thoughts on economics, politics, geopolitics, you can find me on my YouTube channel, David Woo Unbound. If you're interested in my market strategy, I also offer a very inexpensive retail service on davidwounbound.com. Check us out.
All right. We'll put the link down below. Please do check out David's book and his YouTube channel. Thank you very much, David. We'll speak again soon. Take care for now.
Great. Thanks for having me.
Thank you for watching. Don't forget to like and subscribe.